Hello there. This is Tejas and welcome to Trendline's interesting technical trends in the financial markets this week. So we'll be looking at the following technical trends in the video today. We'll start off with the inverted bond yield curve as part of the US Treasury bonds inverted last week. And then we'll move on to the crude oil prices, which are testing the long-term resistance due to the effect of Russia-Ukraine war. And then we'll also have a look at the gold prices, which are already in an uptrend. And finally, we'll also have a look on the stock trends breakout from immediate resistance to hit lifetime high. So before we get into the phenomenon of inverted bond yield curve, let's understand the bond yield itself. So when investor buys bonds, they're essentially lending money to bond issuers who will in turn pay payments, interest payments known as coupons, and then repay the face value on the maturity date. Let's say I buy a bond of maturity date of 2 years and a face value of 1,000 rupees. So let's say I'll be paid a rupees 100 per annum. So my bond yield would be the coupon price, which is 100 rupees, and the bond price, which is 1,000. So the bond yield would be 10%. Yield curve is a graph with bond maturity in the x-axis and yield on the y-axis. As we can see in the graph, the shorter term bonds usually have a lower yields when compared to the longer maturity bonds. This is because longer maturity bonds usually have a higher risk over long term, and also because of the fact that the money is being tied up and it's not allowing the investor to access it for a longer period of time. So when does the inverted yield curve happen? So this happens when the shorter term maturity bonds has a higher interest rate or higher yield compared to the longer term bonds. So when this happens, the yield spread, which is the difference between the longer term maturity bonds and the shorter term maturity bonds, comes into negative. So why exactly does this phenomenon happen? So when investors anticipate a higher risk in the short term, they all flock to the longer term bonds. So whenever there is a high demand in the longer term bonds, there is high price as well. So as we saw in the formula earlier, the bond yield and the bond price are inversely proportional. So when the bond price increases, the bond yield decreases, leading to a low yield. So because of this, the longer term maturity bonds have lower yield when compared to the shorter term maturity bonds, leading to an inverted bond yield curve. And why are we looking at the inverted yield curve and what does it mean for the economy? So the inversion of 2 year and the 10-year bond yield has been a strong indicator of US recession. Well, it's not guaranteed, but it has in fact been a strong indicator. So all 8 recessions in the US history after 1955 has been predicted by the inverted yield curve. But it's not vice versa, meaning each inverted yield curve does not really result in a recession. So the last 3 recessions, for instance, the dot-com bubble, the subprime mortgage crisis, and the COVID-19 recession, when it happened, before that, there was a inverted yield curve present. So on March 24th in 2022, the 5-year and the 10-year bond yield inverted. Well, a 2-year and the 10-year bond yield inversion is actually a more stronger indicator of the recession. Well, on 24th, the 5-year and the 10-year bond inverted. So does this mean the recession is going to happen, and when is it going to happen? Well, it's not an exact science. The lead time of the recession happening and the yield curve inversion happening has been from 6 months to 2 years. For example, in 2005, the inverted yield curve phenomenon happened only for the recession to begin in 2007, mid 2007. So we don't really know the timeline of this. And apart from that, there is also high levels of inflation that are present globally right now. So because of the investors, the investors have been moving on from stocks to the bonds, leading to higher demand, higher prices, and thereby lower yields. So we need to look at all different factors before making a decision. Now let's have a look at the crude oil prices, which are testing the long-term resistance. With the news of Russia-Ukraine coming in very frequently, the prices of the crude oil has been very volatile. So here is the weekly price action of the crude oil since 2008. So the crude oil hit a high of about 140, or just over $147 in 2008, and it made a very nice resistance line from 2011 to 2015. So resistance is a level at which the price struggles to pass through. So whenever the price hits the resistance, the sellers come in, place the sell orders to drive the prices lower. And higher the number of times the price touches the resistance, the higher the probability of it happening again. So this is the long-term price action, and this is indicating resistance at the current levels, which is at around 116 to $120. So when you look at the short-term price action, though, there is a strong uptrend present in the form of a parallel channel. And every time the price has hit the bottom line of the parallel channel, it has actually come back up to trade in the parallel channel. And very recently, because of the Russia-Ukraine crisis, the prices actually broke through the parallel channel to break through the long-term resistance as well in the 116 to $120 to test the 139 a barrel. But right now it is trading just below the upper line of the resistance level in the parallel channel. So even though the short-term price action is indicating a strong uptrend, there is a very strong resistance level at around 116 to $120, which the price has to break through before resuming its uptrend. Crude oil is not the only commodity that has been affected by the Russia-Ukraine war. The safe haven asset gold is it's also been in an uptrend since a year actually, and because of the Russia-Ukraine war, it managed to break through a resistance at around $11. So since a year, the gold prices have been taking support from the upward sloping trend line. As we can see, every time the prices has touched the upward sloping trend line, it has come back up because there is a buying interest at this level. And when the Russia-Ukraine war intensified, investors flocked to buy gold, because of which the price was able to break through the resistance level of about $11 and managed to test the previous resistance at about $2,073. And right now it is trading at a very crucial level at $11. It'll be very interesting to see now, because even if it manages to breaks through the support at $11, there is a very strong support on the upward trending line. So, and hence the prices might take upward trending line as its support before resuming its uptrend. Now, finally, let's look at the trend's breakout from immediate resistance to hit life high. So this stock has been in a very strong uptrend, trading in a parallel channel, wherein the lower part of the lower line of the parallel channel indicates the support and the upper line the resistance. But recently, from about April to February to March, it has been in a consolidation phase. But last week it managed to break out of the resistance, and it tested the resistance of the parallel channel actually. So now it will be very interesting to see if the stock will take the resistance, which is at 1200 levels, as the support before resuming its uptrend. So this has been the interesting technical trends in the financial markets this week. This is Tejas signing off.